We're back now to Bob Pisani with today's ETF Edge. Hey, Bob.
Good to see you, Scotty. I'm joined now by a very special guest. Morgan Housel is a partner at the Collaborative Fund and the author of the best-selling book, The Psychology of Money, which has sold over 4 million copies worldwide. This is one of the best-selling financial books of all time. He's out with a new book right now, same as ever, Guide to What Never Changes, noting that while technology and change seem to be accelerating, human behavior is not accelerating. He joins us now. Thank you, Morgan, for being with us. Your key theme is that investing styles and technology are ever changing, but human behavior doesn't change at all. Now, why is this such a key concept to grasp as an investor?
Well, thanks so much for having me, Bob. I think it's really important because all of our attention in the industry, the vast majority of it, goes to what's going to change. What's the next big technology? When's the next recession? When's the next bear market? The collective track record of accurately predicting those kind of things is not great. But for me, as a financial journalist, I was always just interested in looking back at financial history and realizing what does not change. The behaviors that were the same thing 100 years ago as they will be 100 years from now. So if we put all of our emphasis into those behaviors that never change, I think it pushes us much closer to a clear view of what's actually going to happen in the future.
Yeah, you know, a good part of this book is dedicated to evaluating risk, and you do so well explaining this. You've got a great chapter explaining why so many events that are supposed to happen once in 100 years seem to happen all the time. A 100-year flood, it happens. A 100-year hurricane happens. A 100-year pandemic happens. A 100-year stock market crash happens. They seem to happen all the time. Explain that seeming anomaly to us. Why do these 100-year events happen all the time?
Well, look, if in any given year there is a 1% chance of a catastrophic hurricane, 1% chance of a terrorist attack, 1% chance of a pandemic, on and on and on, in any given year, one of them is going to happen. So in almost any given year, and certainly every decade, we have these events that seem like they were completely out of the blue, black swan, nobody saw this coming, once in a lifetime kind of thing. But since there are so many of them, it happens every single year. I've been an investor for 20 years, not even that long. But in every period during that time as an investor, there have been a million things to look at in terms of reasons not to buy, reasons not to be an investor. Markets overvalued, the economy is weak, politics is a mess, go on down the list. And during that period, the market's up almost fourfold during that period. And I think that is kind of the common path of history. At any given period, there is something going on that seems like it's catastrophic and seems like we should not be able, that we should not deal with this as an investor. And that's the normal path. Yeah. And then you look back over a long period and realize like that's where the rewards are.
Yeah. There's also a great chapter on the right way to view inspired but crazy geniuses, as you call them, like Elon Musk and Steve Jobs. You even bring in Walt Disney, the man, and talk about him as a bit of an eccentric. So what's the right way to look at these people, at the Elon Musks and the Steve Jobs of the world? You have some comments on that.
Well, it's always the case. It always has been the case and will be that people who have unbalanced success, they have extraordinary success, are by definition not well-balanced people. And because of that, there are going to be parts of the world, the thoughts that they have, the beliefs that they have, actions that they take that we disagree with. Of course, if they are thinking about the world in good ways that are out of the box and kind of crazy, of course there are other ways that they think about the world that we might disagree with or find repulsive. That's always been the case for all of these people. Yeah. Steve Jobs was like that. Isaac Newton was like that. Walt Disney was like that. One other way to think about this is that people who tend to be very good at one thing tend to also be very bad at another thing. It's like your mind only has so much bandwidth for so much attention. And if you are a kind of person who is devoting your entire life to your business, your investing strategy, whatever it might be, the huge majority of those people are going to have major deficiencies in other areas of their life. So be careful when you're trying to emulate their behavior or look up to their life without getting a full sense of the cost of what they're doing.
Yeah, now I'm going to have a lot more. We have a lot to talk about with Morgan. We're going to have a lot more on timeless investing wisdom, including his thoughts on ETF investing, index investing, coming up. Morgan Housel is going to be with us for 20 minutes on ETF Edge at 1:10 p.m. Eastern Time. He'll be joined by Dave Naudick, the financial futurist at VettaFi. We'll also be discussing the explosive growth of zero-data expiration options. That's etfedge.cnbc.com. Scott, back to you.
I appreciate that, Bob. Thank you.